everyone, welcome to Adulting with Moi. I am the founder, Janelle Quick, and I have the amazing Brandon here with me. We are in a car. I'm in Brooklyn, so we thought we should change it up. So here we go.
Let's do it.
I hate you. Okay, so this topic is about investing, and he is our investing expert. So we're going to ask the questions that you asked me to ask. So here we go. As a recent grad, where should I look to start investing, or should I focus on paying back loans?
I would, it's very interesting, and I think it really depends on your situation. But typically, you want to start investing as soon as you are able to. So whether that means putting away 6 months of expenses, as long as you're able to cover your monthly bills, I think it's also always a great way to invest. And another thing, actually, on the converse, what you can do is pay down debt, because technically you can get the same return as if you invested and your money appreciated. So it really depends on your situation, but either way is a great method. So
okay,
yeah,
cool. Is it true that you shouldn't start investing until you control your debt?
Yeah, well, if the payments are something you can't manage, you definitely don't want to put money aside. You typically want to invest with your discretionary income. So there's programs kind of like Sophie that helps you redistribute your debt, refinance it so you can get a lower monthly payment. And what that'll do is kind of make it less stressful on you, so that you have more discretionary income to put aside monthly to possibly invest.
Cool.
Yeah.
Okay. Next question is, what platform should you use to start your investing portfolio?
Great question. Okay, so there are tons of platforms out there. As millennials and young adults, I think the best thing we can do to help save ourselves some money is go with Robinhood. It's a free trading app. You don't have to pay per trade, which is something almost revolutionary in the financial industry right now. So that saves you a ton of money. I think last year I probably saved maybe about $200 just in trading fees alone, just by using Robinhood. There's other apps out there, but I think Robinhood is definitely doing something incredible.
Yeah, I've heard of them too. They're good.
Yeah.
Okay, and then the next question is, how should you make informed decisions about the market? What resources should you read, listen to, and or watch for your investment needs?
Yeah, definitely. So there's CNBC, Jim Cramer's show. Pretty much anything on CNBC is pretty good. Reading the Wall Street Journal. Wall Street Journal, Bloomberg, downloading the Bloomberg app. I've personally had the app on my phone since I was about 19, and I was just fascinated with looking at the stocks, looking at the tickers, the news that came through, and understanding how that affected the stock market and the world we were in. So everything correlates in one way, and the investor's job is to really find out how the news is going to impact the market that day. So,
Okay.
Yeah.
Another question is, what's the difference between stocks, options, and futures?
Okay. Stocks are kind of, a piece of the company. Mm-hmm. So say, and I would look at it kind of like a share as a piece of the company's stock. So it's kind of like a multiplier. So if you buy 5 shares, if the company stock appreciates by $1, you just made $5. Mm-hmm. Options are, a way to kind of short the market, which means like, saying if you believe a stock is going to decrease in value, you'll short it, and you'll make money if it does go down, because you'll buy it at one price and sell it at another.
Yeah.
And so conversely, you can do the same thing if it goes up as well. Yeah. So it's just giving you more flexibility and the ability to make money if the stock market goes up or goes down. And most people don't know you can make money when the market goes down as well. Futures are, dealing with kind of more commodities. I haven't gotten into that personally.
Okay.
So I wouldn't shed too much insight on it, but it is something I'm looking to get into within the future.
Yeah.
Pun intended.
Really annoying. Okay. Yeah. Well, that's good to know. So the next question is, what are the best strategies for investing, or things that you've done?
Okay. I think this one is, Warren Buffett has made this strategy very famous. It's called value investing. I wouldn't say it's the easiest, but it does have a lot of value to it. It's called value investing.
You really on
once
this
again,
you are. Okay.
but it's called value investing. So pretty much, if a stock is trading for a lower price, and you read the financials, you read their annual
Oh, that's crazy. Okay.
Yeah, so if you read their annual report and you say, you know what, this stock is trading for $20, I believe within the next 2 years it should be at $100. You would buy it at that lower price because you see the future value, right? Exactly. So that's something Warren Buffett really made famous. And I would say another strategy by the Buffett himself is kind of when everyone is fearful, you be greedy. And when everyone is greedy, be fearful. So that's another investing kind of method.
Yeah.
And it kind of tells you where to go to when the markets are down. It's kind of like a good time to buy. So always buy low, sell high.
Yeah.
Yeah.
Okay. Cool. And the next question was, are there any legit and easy to use apps to help with investing?
Yeah, definitely. A few I mentioned earlier, just Robinhood.
Yeah.
That is pretty direct. So it'll help you just pretty much, invest. It's not as complicated as many other apps. There's the Bloomberg app, Wall Street Journal. And then there's Mint, to help you get your finances in order so that you can see what you're able to invest, what you have set aside. And those are kind of like the favorite. Definitely Cash App. You want your bank account app on there, just so you know how much you have in the bank. Those are just a few. Make it, really simple.
Okay, cool. And then the other one was, can you elaborate on 401k investing?
Okay, so your 401k, so pretty much when you and your employer deposit money into the 401k, they're depositing it into a mutual fund. So a mutual fund is kind of like a basket, a bouquet, if you may, of stocks, stocks and bonds.
Yeah.
And typically, as millennials, we typically want, more of our basket in stocks as opposed to the bonds. And as we get older, we have less time to be, more risky. We want to move it into less risky, vehicles of investment, such as like bonds. And so, like my mom's portfolio right now, it's 75% bonds, 25% stocks. Mine, on the other end, is like flipped the complete opposite. It's mainly stocks, and I have a tiny bit of bonds in there. So, it's just a way to mitigate risk.
Yeah.
And your employer matches you up to. It really depends based on employer, but your employer will help match you. Yeah. And that money will come out. You'll be surprised how fast it can actually just stack up. So definitely a great option. There's the Roth IRA for millennials. Yeah. From a tax perspective, that'll kind of be taxed on the front end, and then when you withdraw the money, you'll withdraw it tax free. So what that does, if you're typically planning on being in a higher tax bracket later on in life, you would want to pay the tax now at a lower tax bracket and just take your money in the back end.
That's what I do now.
Yeah. It's just a great method. So.
Okay. Cool. And the last question is. Well, someone said again, how does one start? Which you already answered. But is there an ideal amount to start with when you want to invest? And can people invest on their own, or should they use an organization to invest for you?
Okay. Well, in terms of the right amount, I would say there's never a right amount. Don't wait. Right? If you have $50, there are stocks that cost $5. That's 10 shares. And what you're really after is, I know a lot of people say, diversify, but the more shares of something you have, the better, right? Because if you have one share, if you have one share of a stock, you might as well buy 10, and I know sometimes you may not have the money to do so, but if you believe in that one share, you can believe in 10. So the goal is to kind of acquire more shares and believe in fewer companies so you can get more shares, right? Don't spread yourself too thin. And in terms of, what was the other question?
How much is a good amount?
Well,
investing with using an organization or on your own?
Okay, I would say it really depends on what your goal is, right?
Yeah.
Like if you actually want to learn, if you love the stock market, if you want to move on to other vehicles of investment, definitely go at it on your own so you can learn. You can take your bruises and bumps, trial and error. If you're more passive investor, I would say definitely allow someone else to help you out. That way it's kind of, out of your hands, but the investment is still occurring. So it really depends on your goals and what you want.
Okay. Well, thank you so much, Brandon.
Thank you for having me.
Thank you for tuning in, guys. See you guys next on Adulting with Moi.